Aloha everyone, Joshua Hayes at BigWaveTrading.com. Boy, oh boy, was that a rocky session. This is a pretty ugly overall setup here in the stock market. This now is a major make or break moment. We're here at key February, April support levels of the 200-day moving average on the Dow Jones Industrial Average. Hard rejection at the 50-day moving average. We roll over below these lows in the 200-day moving average. This could get extremely ugly. The same thing can be exactly said for the S&P 500. And the NASDAQ 100, the same thing applies. The February, April 200-day moving average levels go. Look out below. The one bright spot, look at the Russell 2000. Ugly day today, but major relative strength compared to the overall market. And this index is still trading above its uptrending 50 and 200-day moving average, having multiple support levels below it. So one or two things are going to happen. We're going to either reverse here and these Russell 2000 small cap stocks are going to lead, or we're going to break wide open and these stocks are going to follow. If the market reverses higher here, once again, following today's session, my personal portfolio, while it was a down red day, I have way more stocks facing sideways or trending higher than I do completely rolling over. This evening, I only have 3 partial end of day sell signals and 3 full end of day sell signals. Wi-Fi is a 50%er, closing below its 50-day moving average in the April lows on above average volume. Whatever I have left, 50% goes here. And right now, I'll have 25% of what remains there, and the final 25% I'm still giving to here for right now. But following today, I may decide 50% here, 50% there. I haven't quite decided, but I think I'm going to do 50, 25, 25 from here on out for Wi-Fi. SRI is closing below its 20-day moving average on above average volume, the magenta line. So I'm moving 50% of my stops to today's low a day. I then have some here, some here, some here, some here, some here, and some here. I have a lot of stops on SRI as the position still looks good overall with BOP and volume characteristics. It's not dire just yet. And then CAMT closed below the 20-day moving average on above average volume, was knocked out of some of it today. I'll be moving half of my stops to today's low a day. And my final half is right here. The full sell signals, CYRN, they were all speculative, perfect speculator quality. CYRN, fail on above average volume. Your final stop, if you're still long, goes to 5 cents below 265 at 260. QBack is now completely rolled over. Long signal here. My final stop was here, so for now, half of my stop goes here, right below 1020 at 1015. My final half is right below 1010, 1005 still, since volume was below average and no negative BOP, or else I would have moved all of my final stop today's low day. You can do that too, but on an end-of-day basis, with it closing below these lows right here and losing the green BOP catalyst, it's an end-of-day full sell signal. If you trade on an end-of-day basis, you sell all tomorrow morning. And then FC has finally rolled over. There's a clear set of 1, 2, 3, 1, 2, 3 lower highs and lower lows, closing below the April and February, March lows. That is a 100% full sell signal. I was knocked completely out of FC whenever it violated these lows somewhere here, but on a closing basis did not trigger a full sell signal. Now it is. So besides that, that's it. Those are all my long signals that failed. That's it. Not too many whatsoever. There's a lot of stocks where I need to continue to raise stops to ensure that I leave with profits in the names that I'm currently long in case they do reverse. The recent long positions that are showing losses, got to make sure I keep those losses small, and that's all I can do here. Now, before I move on, I also want to make mention, guys, there's still a way to profit in this market even when the indexes are volatile. Today, before the market opened, my S&P 500 option trade of the day was the 268 puts. Always a week out. I always go shorter because I do everything intraday when I do with these puts. These puts moved almost 300% intraday. I went out just 3 days to expiration using the recent Friday options here, the end of the week options. Those things opened around 170 and at one point intraday hit 580. So you have anywhere from a 200 to 300% move in options, the SPY options. It's happened multiple times since the March highs. The SPY options that I've done for SPY trade of the days have moved 200% that day, 200% that day, 200% that day, almost 200% that day, almost 200% that day, almost 300% today. I tell you what, guys, in a range-bound market where there's very few day trading opportunities, I saw CHEK follow through. Mara was on watch and riot with all these blockchain, Bitcoin plays and LEDS. Still, it's just that besides some of these plays that are just basically continuation from oversold momentum trades, there hasn't been a whole lot of the proper pre-market catalyst for big intraday price spikers. CHEK was one I was watching early for follow through. There's no way I thought it would move 100%. But wow, there's still very few stocks moving intraday, and the end of day swing trades and trend following positions, as we're clearly seeing here, are not producing the huge gains. Now that being said, here's a recent long position, HSII. You can see that hitting a new high. CRAI hitting a new high. EBIO. SOXS, my hedge. BPOP hitting a new high, Boot hitting a new high, OLBK hitting a new high. So like I said, MGPI, I'm still long a lot of positions hitting new highs, but that being said, my overall portfolio isn't seeing the kind of gains that these SPY options are moving intraday, and I see a lot of day traders churning, and while there were stocks that moved today, there just hasn't been lately. So if you're not making money on an end-of-day basis, you can day trade, you do have the time, you do want to learn, you do want to make money, you do want to quit your 9 to 5, come into the chat room in the pre-market. I'll give you the next SPY trade of the day, and we'll trade it from there. Right now, just blindly buying the puts right now at the open is working if you use the most recent 1 minute, 5 minute price chart highs in the pre-market as your final sell stop level in case you do not continue to sell up. The setups I'm looking for intraday using these SPY option trades are not necessarily setting up. Today, if you look at a 30-second chart, you can see on both of my prime setups to trade the SPY puts, the SPY just crashed, giving me no entry. The bid-ask spread widened up. But small positions in the morning should continue to work as long as this market stays choppy and we see no real accumulation or I just have a lack of very beautiful, very nice green chart setups. Mara isn't really the setup I'm looking for, but do you see all the green in this pattern? Like VVC, do you see all this green? These charts are the exception, not the rule right now. When there's more and more charts like this, I'll be confident that this market wants to move higher. But moving on to the end of day long signals, just two new hedges. Oil D. I'm already long DBO in size, right around 4 to 5% of my account capital. I think I maxed it out at 2.5% of my account capital, as that's the most I'm putting in any one position. And I currently have gains in DBO, but that being said, I'm also getting a signal now on Oil D. However, Oil D is only in my ETF scan, actually wasn't in there because they don't have the close-end fund thing here, but I still know it's an ETF. It was in my tertiary scan. So 1% of my account capital is going into this Oil D hedge. 26.36 is my limit. My one and only cut loss level, today's low a day, a break to the new 52-week low. Then there's SKF. SKF was confirmed by FAZ, but FAZ, the ultra leverage chart, doesn't look as bulled up as SKF, and if the market does decide to bottom here in Raleigh, I'd rather lose as little money as possible. I can always get long later or add more hedges later, but SKF, I want to get long 1% of my account capital. It was only in my ETF scan, confirmed in my tertiary scan. Limit order 20.99, and I'll be using multiple support levels. I got one here at 20.09. I'll use one right here at 1933. I'll use a third one right here at 1881, and I'll have a final stop at 1860. And then I actually did receive one legit long signal this evening. It's an add signal in CARB, C-A-R-B. CARB is bouncing right above its uptrending 50-day moving average, printing a bullish hammer price bar on heavier volume, pocket pivot point signal. Green BOP is the heaviest it's been in the past week plus of sessions, and it's at least trending back in the right direction. Never went below the zero line, so I'll add 0.5% of my account capital into CARB. It's canceling quality. It was only confirmed in my tertiary scan. Limit order 3040. First cut loss 2925. Second cut loss 28.55, third cut loss 28.05, final cut loss 27.40. Once again, do you notice how my positions are small? 1%, 1%, 0.5%. If you cannot trade small, do not have the time to manage these positions, do not have the account capital, cash is king, or stick to day trading only. And like I said, while there were a few blockchain related plays that were moving today, at least there was a group catalyst in them. They've been lacking lately, but in a range bound choppy market, it's been proven now over and over and enough times that trading these SPY options are the way to go. They're liquid as long as they have a lot of open interest and volume. It's the only way to generate extremely large alpha in a tape that just can't get anything going. And like I also keep saying, if this is how we're trading in March and April, how are we going to trade in May during the month where the old market axiom is sell in May and go away? Very interesting dichotomy that we have setting up in the market. You got the SPY, Dow Jones Industrial Average, and QQQ looking like it wants to break down. And then you got the Russell 2000. My perfect speculator scan, which is still returning over 300 or about 350 stocks, 348 stocks, and my long positions still tracking in long, 220 names in total that are still barely moving lower, sideways, or moving higher. Not sure which is telling the truth. We'll find out depending on how this market follows through to the selling on Tuesday via either more selling on Wednesday or a pop and reversal higher on heavier volume on Wednesday. We want the pop on heavier volume if we're going to salvage this consolidation that the market is currently going through.